Hello, everybody. Hello, and welcome to this seminar on multilateral developments. The rest and the West in multilateral development finance, new actors, changes, and challenges. And this seminar forms part of a larger seminar series organized by the Nordic-China Relation Project here at NUPI. My name is Jon Harald Sandeli, and I'm senior researcher here at NUPI. I'm happy to see that so many have come today, despite some competing events. And I'm not just talking about the China and Africa seminar at the SUM at the University of Oslo, but there's also the annual spring meetings of the World Bank and IMF in Washington, D.C. But for those present, and of course for those who's not present, this meeting will be streamed, but also made available on NUPI's YouTube channel later on, hence the microphones. So the World Bank and IMF, the spring meetings, they form an annual event, and they used to attract a lot of attention. Many protesters and civil society gaining attention in the media for various purposes. But in recent years, there seems to have been a decline in the attention caused by these meetings. And of course, the why of that has probably something to do with the global political shifts. But also, do they reflect the lack of the role and relevance of the IMF and the World Bank? Or is it because there are new actors in the multilateral system? There is a host of multilateral institutions competing, challenging, and collaborating with each other, with the same, but also with conflicting objectives. And new ones emerge, and the most recent ones are initiatives from BRICS and China especially. One is the Asian Infrastructure and Investment Bank, the AIIB. The other one is the New Development Bank of the BRICS, the NDB. These organizations are still very much in their embryonic stage. Both were established in 2015, but the AIIB has matured a bit more recently and gained momentum as the European states signed on as members. We know little yet about their policies and structures. How will they do what? As a result, questions are often asked then about the institutions concerning whether these institutions are supply or demand driven, or what do they respond to in global politics. Some say that the BRICS, the NDB emerged due to BRICS countries' dissatisfaction with the lack of reform within the World Bank and the IMF system, the established discourse or the established actors, which limited then the BRICS countries' influence and voting share in those institutions. And others hold that they respond to a need among the developing countries, demanding and the demands for need for more development finance and funding for large-scale infrastructure development projects, which largely in recent years had been abandoned by the World Bank. This also reflects a general debate whether the multilateral organizations should be seen or understood as actors in their own right, or whether they are arenas through which states mediate their interest and compete for influence. The AIIB demonstrates that China's turn to multilateralism, and the NDB seems important to consolidate BRICS as a group in lack of another collaborative project among the BRICS countries. But do the AIIB and the NDB represent a partner or a challenge to the established World Bank and IMF institutions? How are they affecting or being affected by each other, both in terms of what they do, but also how they do it? For instance, we see now from the spring meeting this week, there is a new focus on infrastructure development by the World Bank. But is this a response to the role of China and the BRICS initiative? Or is it a response to the infrastructure financing gap found in many African states? And regarding the how, will the NDB and the AIIB attend to the established safeguard principles and partnership principles of the World Bank? Or do we see a return to a more traditional conditionality approaches? Or do we see a new form of partnership in the making? These are just some opening remarks and questions to frame today's seminar. With us, we have an excellent group of speakers. First, we have Dr. Yang Jiang, senior researcher at the DIS, the Danish Institute of International Studies in Copenhagen. Her research focuses on the contemporary political economy of China and China's overseas investment in infrastructure. Second out, we will have Per Øyvind Bastø, who is the director of Norad's evaluation department, which of course is a qualification good enough to be here, but he's also here because he just published a book on development financing in the 21st century, where he attends to these questions just raised. And then third, we have Robert Wade, who is a professor in political economy and development at the LSE. And his research focuses on the autonomy and accountability of international organizations. And his talk today will focus on China's geoeconomic strategy and the creation of a tripolar world order. Finally, we will have Dr. Mark Lantain from the House, also senior researcher, who will offer some comments and thoughts before we open the floor for questions and answers. So, then I give the floor to Dr. Yang.
Good afternoon. I'm very happy to be here. First time to be in Oslo and at NUPI. Thanks a lot for inviting me here. And I feel Oslo is a very lovely and warm place. Today I will mainly focus on China. And as Jon Harald said, many of these new banks are just happening. We don't know what they will do. So there are many guesses, many speculations. So my view is that maybe today we can talk about what China has done so far and some of the positions that China has taken on development financing. So we know what to look out for these new mechanisms. Therefore, my theme is China's export of infrastructure through new development banks because it's my belief that the main purpose of China to design and organize these new development banks like AIIB, One Belt, One Road initiative, and the BRICS Bank are to export its infrastructure. Here are the three major instruments so far. Asian Infrastructure Investment Bank, the BRICS Bank or the New Development Bank, and the ever-expanding One Belt and One Road initiative. And they cover many parts of the road, probably supposed to cover maybe 80% of growth in the near future. And one thing is that many things have already happened since these initiatives came about since 2013. A recent data from an investment bank based in London has shown that most of the Chinese bank loans, the Export and Import Bank, the Chinese Development Bank, most of the big projects, over $1 billion, they are along China's so-called One Belt and One Road initiative. So this is not empty. They are all going to happen, and many things are already happening. And the share of such investment is changing from Africa to Asia and also increase in Europe. So this emphasis on Eurasia, on Asia, in the policy has caused the money to flow more to these regions compared with Europe, compared with Africa. And this is the top 20 countries in these 3 years that received the money. And I just want to highlight India and Vietnam because they're certainly not strategic allies of China. They are more competitors in the region, but their high place in the list just shows that China's pragmatism in the initiatives. Maybe this list will change in the future, but it's interesting to keep an eye on the friends and less friendly countries of China.
Is this the China Development Bank?
Also Export and Import Bank, yeah. And in Europe, it's mainly the Central and Eastern European countries that have been the major beneficiaries of China's infrastructure projects, and a lot has been pledged at China's meeting with the Central and European countries, 16 countries. And Hungary, Poland, and Greece, they all compete to become the hub or pivotal countries of China's initiative. And there are other financial instruments. And UK is also China's favorite country in Western Europe, and got a lot of pledges. China indeed, in some sense, is an alternative source of development and growth, not only in the developing world, but also to Western countries. And I think that's what China tries to say. Not only the South needs development, the North, the developed countries also needs development. So as the next host for the G20 summit in Hangzhou, China is trying to combine the tracks on growth and development, and trying to put new instruments of growth and growth engines into that. And we wouldn't be surprised that infrastructure would be significant part of it. And the alternative way from China is that usually China gives big pledges. They don't dwell on the details in the initial stage. And of course, then implement it or not, we'll see later. China is very good at fast construction, and it's cheap, comes with easy financing and maybe with lower interest rates. And China boasts of developing country experience in very tough physical environments. And for many very poor African countries, for instance, they can use natural resources and commodities in the future in a kind of barter trade to get infrastructure right now. But from World Bank and some other lenders, they need some guarantee. The money needs to be guaranteed on some assets that already exist now. So for China, China is much more accessible and flexible. And often China is criticized for attaching no strings to their loans and aid. Especially, it doesn't pay attention to human rights, democracy, or whether it's a liberal economy. But it does have conditionality, especially on the business value and whether the country sticks to one China policy, which most countries do. And sometimes China can use business or economic, can pull some strings. For instance, in recent nuclear crisis in North Korea, China has suddenly cut off a lot of supplies to North Korea and froze assets. And the same thing happened after a nuclear crisis in Iran, that China just instructed its big state-owned enterprises, which has the most investment in Iran, to slow down the implementation of some of the agreed contracts. Doesn't go forward. Okay. But at the same time, we can see signs that China is getting closer to the West. China used to give a lot of free grants and concessional grants, but the component is lower and lower. The majority of the current pledges are commercial loans with a bit of soft loans. And a recent case in Thailand is that China was bidding for a high-speed train connection between Bangkok and Chiang Mai, and China lost that track because Thai government said the interest rate offered by the Chinese bank was too high. But of course, there are commentaries in China saying Japanese were sabotaging on at the back. So. And when it comes to China's position on development financing and its approach to developing country markets, on the post-2015 development agenda last year, before the major meetings, China was calling for open and stable market systems, which are some familiar language we see in Western papers. And like the Chiang Mai initiative, China attached the conditionalities. You know, a lot is talked about the BRICS contingent reserve arrangement, but in reality, the majority is tied to IMF conditionality. And sometimes China sends its experts and officials to the recipient countries to help with the governance so that some of the deals there can be implemented for China. So it does touch on the capacity on good governance of those countries. And another aspect is that China is getting more involved again in the conflicts. And now the world has many military and ethnic conflicts. And I'm not sure if I have time to get into this, but the West is also getting closer to China. I don't think I'll focus that. I think maybe the speakers next will focus on this. But we can also notice a lot of emphasis on private partner, public-private partnership infrastructure now, and welcomed in general China's AIIB, New Development Bank, and One Belt One Road for filling the potential to filling the financing gap in infrastructure. I don't know how much time I have left. I think on Monday I talked about these themes, and one from the audience said I was overly critical. But I think the context of me talking about the lessons from China's past infrastructure projects within China and outside China is that I feel that in general there is a predominantly positive response to China's such initiatives because it fills the infrastructure gap or financing gap. It brings new growth engines. And in the past, a lot has been said about environmental problems, human and labor problems in Chinese projects. So I don't want to focus on this, not because it's not important, but the first three aspects has been paid little attention to, and I think there needs to be more serious study about such projects, so that we can, when countries collaborate with China and fund AIIB and design institutions, we can set up good institutions and good standards to make sure that they have good developmental impacts. So just go quickly about low efficiency and redundancy of infrastructure in China. Here are some photos from the ghost cities in China, mostly commercial real estate developments. And this is a ghost city in Angola that China helped to build social housing in exchange for oil and commodities from Angola, but turned out it's not convenient location. It's too expensive for most people there, so it became a ghost city. And then we can look at capital output ratio. And this export of infrastructure somehow reminds me a little about China's first response to the global financial crisis when infrastructure was an important part of it. And we can debate to what extent that stimulus package was beneficial or harmful to China's development. But when we look at the efficiency of the infrastructure, at least part of the package needs to be investigated. The usage of these things, and even the brand of China's export infrastructure export of high-speed rail. There is a study from last year by Chinese scholars funded by Chinese Ministry of Science, finding that even though they have contributed a lot, but there are problems like they have added pressure on roads because poor people cannot buy tickets; they're too expensive. So because of the expanding network of high-speed roads, then there are fewer regular rail. So then they turn to buses, which led to passenger and freight congestions. And then the problem of redundancy. One example was the construction of a high-speed rail from Beijing to Shanghai. When there was already a line, parts of it between Beijing and Tianjin and between Nanjing and Shanghai, there were already lines. But when they planned the second long line, they still built the whole way. So parallel lines running, competing with each other. The second aspect is about debt, and such projects are huge. And the question, many of China's so far projects overseas are guaranteed, or they're like barter trades on commodities. So there's a question what the future projects will be guaranteed with or based on. And within China, a lot of them are based on land. But some of them have already gone on default because the land prices have dropped. And this is addictive. Even since 2013, China has come up with several mini stimulus, and more on the road with infrastructure. So then that raises the question, how much infrastructure can spill over to other sectors and stimulate more growth? An example is, the highway between Poland and Warsaw, that the Chinese company was asking higher prices after they signed the contract. In the end, contract broke, and the Chinese government didn't want to help that company as that Chinese company and the Polish government expected. In Sri Lanka, the 70% of the national debt is owed to China. Partly because of a construction of a new port city. And so the new government in Sri Lanka is asking China to forgive or delay some of the debts. The last point is about corruption, or what do you call it, nepotism or cronyism. But the fact is that it's not necessarily corruption or personal relations, but many of these infrastructure projects go to state-owned enterprises, big companies. For smaller private companies, it's quite difficult to get in. They may be assigned to less profitable parts, or they may suspect that it won't be so profitable, and this is public-private partnership is just another way to get their money in. So in China, this iron rooster in Chinese, representing railway, road, and airport, they think that they don't give a feather to private persons or private companies. They go to mainly big companies. And I heard that something is happening with British projects to go into big British companies. So that's something to look out for too. And in 2012, a relatively more independent media in China exposed that in some of the new high-speed rails, for instance, the price in the procurement for a sink top, it was 26,000 yuan, which is maybe 26,000 Norwegian kroner for a sink top. For a water valve, it was 11,000. And the reason was because the ministry they have specific channels of supplying, and some people in the industry among the manufacturers said it was almost impossible to get approval if they tried to change suppliers to these parts. So these examples show that when it comes to the international projects, it's good that AIIB has solicited advice and opinion from other countries in its preparation stage, and has said that many times that it will adopt international standards and institutions. I don't know about Norway, but Denmark was one of the founding members. And there was debate within Denmark whether they should join in the first place. It seems there was pressure, or at least indication from the US as well. But in the end, Denmark joined at last minute after UK led the coup, partly because Denmark believed that a small country may help China set up good institutions and standards from within and from the early stage. So I guess that was mainly my point. I don't think I'll go into the environment. So that was my talk. Thank you.
Thank you, Jon Harald, and thank you for the invitation to I need to use this, right? Yeah. To come here to talk about this interesting topic. My talk is based on this book, New Challenges and New Roles, that I recently published with Stein Hansen, who is at the background here. And this is based on new roles, development financing in the 21st century. It's actually a brochure on the book on the table behind there. So my talk is going to be on the multilateral development banks. The World Bank, the Asian Development Bank, the African Development Bank, the European Bank of Reconstruction and Development, and the Inter-American Development Bank. In addition to these 5 banks, there are 2 other banks that are less known but have almost the same lending volume. That's the Andean Development Bank, or CAF as we call them, and it is the Islamic Development Bank. There are also big multilateral development banks. These banks, the intention with these banks is to fill a gap in the financial market. They focus on developing countries and regions where access to funding is limited. They provide a crucial role in providing credit in the form of high-risk loans, equity positions, and risk guarantees instruments to public and private investments. They're intended, in addition to the financial role, they also have non-lending services and provide research and knowledge transfer. They're intended to be apolitical, neutral, and impartial. Formally and rhetorically, it is fundamental for these banks not to interfere with borrowing countries' domestic political issues. So in that respect, they're quite different from the UN organizations. I'm going to bring you through a line of thoughts based on 5 points. The first point is that there is an increased demand for development financing that is not being met at the moment. Even though we have different financial flows, it's not only the development banks, but as you know, it's also the foreign direct investments, it is remittances, it is, of course, bilateral development aid also. In total, these financial flows have been estimated in 2013 to be 1,439 million. So it's a large volume of financial flows, but it's still not enough. In Africa alone, it's estimated that there is a financial gap when it comes to financing of infrastructure of 93 billion annually. And of course, in Asia, it's much larger. So the question is, how do we fill this gap? So that's my first point. There is a big unmet gap of financial demands. My second point is, of course, to compare the multilateral channel and the bilateral channel. A recent study done by ODI compared the 2 different channels. Their assessment suggests that the advantages of the multilateral channels derive from their ability to collectively organize, pool, and advance common global causes, while bilateral channels are conduit of donor control, visibility, and preferences. They looked at the politicization of each channel, the nature of aid recipient preferences, the selectivity exhibited in both of these channels, the role of each channel as provider of global public goods, and the relative efficiency of each channel, and the tendency of fragmentation. They found that there is significantly more satisfaction with multilateral channels than with bilateral channels. Multilateral channels are found to be less politicized, more demand-driven, more selective in terms of poverty criteria, and a better conduit for global public goods. Bilateral channels came out as more politicized, more selective on governance criteria, having slightly lower administrative costs, and are more fragmented, much more fragmented. So there is a preference for multilateral aid. My third point is that the traditional MDBs are facing huge challenges and need to reform. As you know, these banks, starting with the World Bank and IMF, were established in 1945 in the post-war era. And at that time, the geopolitical context, it was between the West and the capital West and the communist East, and the division of the world into the industrialized North and the developing South. This concept is not longer a valid concept. This has fundamentally changed. Poverty rates have declined. This massive flow of private funds to developing countries has emerged. The role of developing middle-income countries has expanded due to their strengthened financial positions. Of these reasons, and some other reasons, the banks have been criticized. They have been criticized by development partners for lacking a poverty orientation, and by several shareholders for being too bureaucratic and too costly, by borrowing countries for imposing conditionalities in order to provide loans, by representatives for civil society and non-governmental organizations for providing infrastructure investments without a lack of understanding of environmental and social concerns. In addition, we see that the traditional donors, the G7 countries, the OECD countries, they are increasingly unwilling to recapitalize the traditional MDBs. Both European countries, Japan, and of course the US are facing economic constraints and are cutting down their multilateral engagements. This makes the situation quite difficult for most of these traditional MDBs. And in addition, as we know from the Norwegian context, development policy is increasingly integrated into security and foreign policy, with an attention on fragile states, on conflicts, on refugees, etc., and less attention on these big issues in the MDBs. We also see a flurry of new financial mechanisms, vertical funds, new institutions being established all the time. So Omid Karas at the Brookings Institute, he has estimated that now we have more than 250 multilateral finance institutions. And of course, they're also competing when it comes to getting funds from from donors and to capitalize their funds. And of course, borrowers have a possibility to choose from different financial channels. They can choose to go out in the capital market, to have bonds, etc. So they have a possibility to pick and choose. And also they look at the different banks for who is offering the best terms. They look at the financial terms. They look at loan approval and procedures and the time it takes. They look at loan requirements. And of course, the safeguard policies is an important element in these loan requirements. An interesting study by Chris Humphrey, I believe is now at the University of Zurich. He has looked, he did compare the World Bank, the AIIB, and CAF in Latin America, and found that the borrowers are really looking at all these three aspects when it comes to choosing where to borrow the money. So there is a pressure to reform to stay on top of the competition. 2 years ago, I served at the board of the AIIB, and this was a reality. It was a hard competition with these other institutions to provide loans to the countries in Latin America. In addition, and I'm not going into this, but the credit rating agencies have changed their way of rating the MDBs. So now the portfolio risk plays a big role in staying at this AAA assessment. So this makes it much more difficult than it used to be. The need for more capital is eminent for the banks. I'm not going into the Chinese investment because you did that in an excellent way. And of course, China's different involvements in all parts of the world, it's a real competition for the established banks. Even, as you know, there is a big debate on allowing China to get more shareholding in these banks. It has been a battle in IMF, it has been a battle in the World Bank, in the Asian Development Bank, in AIIB, and I'm sure in the other banks as well. And because they have not been allowed to buy shares, they have found different other financial arrangements with the banks. For instance, in AIIB, there is a China AIIB co-financing fund that is managed outside the bank, and where both China and AIIB contribute $2 billion US. And then my fourth point, I guess, is that exactly this, that the G7 countries have kept a too strong position in the traditional banks. In the World Bank and IMF, the top 5 shareholders, the US, Japan, Germany, the UK, and France, they hold nearly 40% of the total voting powers, while BRICS countries together only have 11% of the shares of IMF and the World Bank. This is about to change a little bit at the moment, but still it's a big difference in the voting powers of the BRICS and the G7 countries. And especially when we look at China and India having 20% of the world's population, and the BRICS countries have at least 1/5 of the world's economy, then of course this is unfair representation. So there has been a fight to get a greater voting power for India and China, especially in the World Bank and IMF, and they have not yet succeeded. Western countries, they're of course afraid of losing some influence in these institutions. So this is one of the reasons why AIIB has been established, to give a different platform for these new countries. When Joseph Lin, former vice president of the World Bank, in a paper discusses the future of the banks, he sees three possibilities. One is to do away with the MDBs as a relic of the past. That's not very likely. There is not a tendency to close down international organizations. The second possibility, according to Lin, is to carry out business as usual. This would weaken the mandate of these institutions. They would lose clients. Their financial strength would dilute, and their technical capacity would weaken. The third possibility, according to Lin, and maybe that's the only possible solution, is for the MDBs to get a new mandate, new governance, and new financing. I believe, and this is my fifth point, that the establishment of AIIB might trigger a solution like the third option. Was the new development bank that was established in 2014 and has had a slow process of getting started, due of course to the weakened position of some of the BRICS countries. But the AIIB is up and running already. And it is an interesting institution to follow. It is, the president is Jin. He used to be a vice president of the Asian Development Bank. He has wide experience from managing an MDB. They have given positions to 57 countries so far. They have recently appointed vice presidents, and out of 5, 2 come from outside the Asia area, one from the US, former World Bank, and one from the UK. So, and also when it comes to I'm a bit more optimistic than you when it comes to safeguard policies and to China to take into account the need to have sound safeguard policies. Interestingly enough, they also have a non-resident board. And the idea of having a non-resident board is maybe to be more efficient and effective. So AIIB has just started. I think they have just approved their first loan to a solar plant in India. and it's going to be so interesting to see how this is going to change the MDB world, because that is a big need. Thank you.
Is something happening or not?
Just take some time.
Okay. So I'm going to step up a level of generality and talk not about the specific bank so much, but about the larger strategy that lies behind it, the larger trends that these new organizations that we're talking about are a part of. Let me see. Right, so let me begin with this. Does this have a... Yeah. So this is a statement from Larry Summers, the former Treasury Secretary, Professor of Economics at Harvard, in the Financial Times a year ago. And this is a very striking statement. He said in October 2014, October 2014 may be remembered as the moment the United States lost its role as the underwriter of the global economic system. I can think of no event since Bretton Woods, since 1944, comparable to the combination of China's efforts to establish a major new institution and the failure of the United States to persuade dozens of its traditional allies to stay out of it. So this statement illustrates the high political significance of the organizations that we're talking about. So let me just see. So these are just a run over of what you've seen before. Some of the initiatives that China has been taking: the One Belt, One Road, the AIIB, the New Development Bank, the Silk Road Fund, the Development Bank for the Shanghai Cooperation Organization. China's also established a number of think tanks to give intellectual weight to this whole project. And much of this is all focused on China constructing what you could call infrastructure alliances with countries in Southeast Asia, South Asia, Central Asia, Eastern Europe. But in addition to all this, China has also been instrumental in starting the CRA, Contingent Reserve Arrangement, with the BRICS countries as participants. You can regard the Contingent Reserve Arrangement as a kind of embryonic IMF. So these are embryonic multilateral development banks. This is an embryonic contingent reserve, an embryonic IMF. But also, as part of this larger project, we have the internationalization of the renminbi, which is going on at a pretty fast rate. For example, already 25% of China's trade is being settled in renminbi, and that's up from about 3% as recently as 2009. So from 2009, 3% up to 25% today. That's an astonishing rate of increase in the use of the renminbi for settling China's international trade. But also China has established about 5 offshore clearing centers in Asia, but also in London and Frankfurt. And very strikingly, the renminbi is now included in special drawing rights alongside the US dollar, the yen, the euro, and the pound sterling, which manages to hold on by its fingertips as a major global currency. And by the way, if any of you are interested in a research project, here's a neat idea: to do a study of China's experience in joining the special drawing rights. It would be very interesting to know more about how that event happened, because that is a tumultuous event. That is a crystallization, a point of crystallization of major world economy, world politics events. And to my knowledge, it's not been studied. I might study it, but there's plenty of room for other people to study it as well. So, as I said here, all this going on is, this represents points of crystallization in the move towards a tripolar world, what is often called a tripolar world, which is no longer centered only in the West. So I want to elaborate this point about the tripolar world a bit. The China story for the past 2 decades has been a story of China's very fast growth, very high investment, huge trade surpluses, much of which was recycled into US Treasury bonds, fueling US growth. And to the point where today China has the second biggest GDP, it's got the biggest foreign exchange reserves, it's the largest trading partner of more than 100 countries. By some estimates, the largest trading partner of 130 countries in the world. That's a very remarkable statement of China's presence in the world economy. So China has moved from being a spillover taker, a taker of other people's spillovers, to a spillover maker. And so in response to these developments, the Chinese strategy is to create a much more China-centric economic and political order covering Southeast Asia, South Asia, Central Asia, Eastern Europe, so that all roads lead not to Rome, but, as was the case, but to Beijing, at least all roads in this general part of the world. And China's relying heavily on geoeconomic instruments rather than military instruments for most of this project, and especially geoeconomic instruments in the form of infrastructural alliances. That is, China building infrastructure for governments in this part of the world. Infrastructure alliances coupled with, as a second main pillar, renminbi internationalization. Those are the 2 big prongs of this initiative. And the Financial Times marked what's been happening with a series, China Shapes the World, in 2011. Of course, the great question that all this arises is what will be the relationship between the China-centric order and the Western US-led order. And in navigating itself through this construction of a new China-centric order, one of the big preoccupations of the Chinese leadership is to avoid the mistakes of rising Germany and Japan before the Second World War, and also to avoid Japan's and arguably Germany's subordination to the US post-Second World War. These are the 2 things that China most wants to avoid as it rises. So, wait a minute. Oh gosh, sorry, wrong way. Oh. Okay. Having talked of the tripolar world order that China is creating, I want to go on to say that that word tripolar is misleading. It's misleading, one, because, well, this is one reason, because China, Brazil, India, Russia, now all of them are in the top 10 of world of countries by GDP, and that makes a big change from previous centuries. And all of these are deeply integrated into the world economy. But to talk of a new tripolar order or a new multipolar order, just in terms of quantities like trade flows, such as China is the biggest trade partner with more than 100 countries, just to talk of a multipolar order in terms of a change from the previous more unipolar order in terms of quantities, that is trade, investment, and so on, that is misleading, because the other component of pole, the idea of polarity, is what are the preferences of the various poles, and in particular, what are the preferences of the leaders of these countries as these countries climb into the top ranks by the size of their economies. One view, in terms of what are their preferences, one view says that the governments prefer, they want a larger governing role, they want more participation, but they want more participation in basically status quo organizations, more participation in basically the existing world order, and therefore their rise will not lead to conflict and disorder. They will fit in, they will accommodate, simply that they want a bigger presence. That's one, if you will, optimistic view. Of course, when I say optimistic, I mean optimistic from the Western point of view, because it means that these new rising countries will not actually change much the content of global rules, the content of the order. But the other view says that they do want to change the existing rules. In particular, they want to change the existing rules and institutions to make more space for a state-directed capitalism, which is significantly different from the sort of capitalism promoted by the Washington-Brussels consensus. They want to change investment rules, trade rules, and other kind of rules to make more policy space for their state-directed capitalisms. And then the great question is, suppose this second view corresponds closer to the truth. The great question is, what will be the response of the incumbents, that is the Western countries plus Japan, to the efforts of these states to change some of the global rules? So what I want to do now is to talk about the economic and political logic of China's infrastructural alliances. And my three main points are these. I'll elaborate just on the first two. The first logic, the economic logic, is that these organizations that we're talking about, with the huge investment flows that go with them, are aimed at, by the Chinese leadership, at finding a new source of economic growth, a new way to recycle China's foreign exchange surpluses away from simply buying more US assets, like US treasuries, a way to find new demand for China's construction industries, which now have huge excess capacity because China's growth has slowed down. So China is looking for an external source of demand for its existing construction industries, its steel industries, its train industries, and so on. And then finally, China is looking for a new source of demand for its manufactured exports because of the recession in the West. That's the economic logic. And secondly, and related to the economic logic, all these steps that China is putting in place, renminbi internationalization, the infrastructural alliances, and so on, may help China avoid what is the nightmare of the Chinese leadership. The nightmare of the Chinese leadership is that China will get stuck in what is called the middle income trap, and will not be able to get out of the middle income range into the high income range. It will become old before it becomes rich. And I want to elaborate on that point a bit. And just finally, we should bear in mind that there's a very strong political security connection with all these economic projects, namely that China is hoping that by building this infrastructure, it will create political alliances to its West in order to compensate for its lack of military alliances and to compensate for all the hostility that China is generating in the East China Sea and the South China Sea by its claims on islands and rocks. So I want to elaborate this first point, infrastructural alliances as a new source of economic growth, and beginning at a surprising point, beginning by talking about the US trade deficit. And this is critical for understanding the current state, the current recessionary state of the world, as distinct from the high growth phase before the 2008 crash. From 1980 to 2008, the US trade deficit was the driver of global economic growth. This was the great bulldozer, the US trade deficit. The US was importing much more than it was exporting, to the point where in 2006, the US trade, when I say trade, that's just a shorthand for current account deficit. The US trade deficit or current account deficit equaled India's GDP. I hope you are amazed by that, because I'm amazed by that, and everybody should be amazed by that. The US deficit external deficit in 2006 equaled India's GDP in that year. Absolutely astonishing. But this was a great driver of global growth. But then after 2008, the US trade deficit shrank by half or even more than half relative to 2006. And it's hardly increased again since 2008, meaning that the US is no longer a source of a driver of global economic growth. So this is just a chart showing the US deficit, and this is 1980. Here you can see that the deficit went up. Going down means going up. Then it reduced by 1990, but ever since 1990, the US to 2006, the US deficit went up and up and up, and it has only reduced by about half since then. But this reduction means that the US deficit is no longer the great driver of global growth. So what about China? After 2008, China helped to fuel global growth by means of a huge monetary expansion like the world has never seen before, to the point where between 2009, when the base of the monetary quantity was already very large, but from 2009 to 2015, bank loans increased by 3 times. 3 times. It's absolutely huge. And this, of course, raised China's demand for imports in a very big way, especially for commodities. But the result was a huge excess capacity in Chinese industry, going with falling product prices. Product prices in China have been falling for 47 continuous months up to now. So many companies are making losses. They're no longer investing. Non-performing loans are estimated by independent observers, not the Chinese government, at 40%. 40% of total loans are non-performing loans. It's a massive problem in the Chinese financial system. And so there's been a very big fall in imports into China, especially of commodities. And the result is that not only is the US no longer a source of global growth, China is no longer a source of global growth as it was after 2008. And therefore, we are in this long, stuttering global recession. And not just that, but there are huge crises, as you know, economic crises and political in Brazil, in Russia, in South Africa, in Nigeria, Venezuela. Many more countries have been put into crisis because of these events. And just to show you these astonishing figures for Chinese investment, I said that this is the course of huge capacity, excess capacity in China now. This is 2012. The ratio of Chinese capital formation to GDP was 47% in East Asia and the Pacific minus China. It was 30%. And in the rest of the world, the developing world, low-income and middle-income countries, 25%. If you want one single short answer to why East Asia has developed so much more than Latin America, Africa, the Middle East, and everywhere else, it's in these figures, in these numbers, because China has had this absolutely unprecedented, historically unprecedented level of investment to GDP, but also very high in East Asia, relative to all the rest of the developing world. That's the single answer to the question of why Asia has grown, especially East Asia and China, have grown so much faster than the rest of the world for a long time. So, and this is basically, what I've been showing you is basically the driver of China's new international development system focused on organizations like the AIIB, the New Development Bank, and so on. It's basically an alternative way to recycle foreign exchange surpluses of China so they're not so dependent on buying US-type assets. And also, these projects open the market for excess production capacity at home. And that's very important for reducing the political resistance at home to the great domestic reorientation of Chinese policy away from investment-led growth towards consumption-led growth, because lots of industries in China are invested in construction, in investment of other kinds. They want more investment. They do not want the government to cut investment to GDP, whereas the government is trying to reduce investment to GDP and increase the very low levels of consumption to GDP. So the investment companies resist this, but if the government opens the way to big infrastructure contracts out to the west of China, into Eastern Europe, as far as Greece, then these industries at home will find a market, even though the market is not so much in China. So this is a bit like the logic of the Marshall Plan that the US put in place after the Second World War. I want to come and finish on this point about the middle income trap, because it's sort of complementary to what I've been talking about. It's often forgotten that China is not only very big, as in having the second biggest GDP in the world, it's also very poor. Namely, China's GDP per capita is only at the maximum, if you use the best measure from China's point of view, it's only 20% of the US per capita GDP, only 20%. By some measures, it's less than 10%. And this puts it, if you use the 20% figure, it puts it at number 85 in the world ranking of countries by GDP, number 85. So it's very poor, even though it's very big in terms of GDP. And the leaders of China worry very much that China will become old before it becomes rich, and it will become stuck in the middle income trap, or also called the middle capabilities trap. It won't be able to make it into the higher income threshold. And I'll just show you, I just want to draw your attention to these figures here. This is 2013, it's ranks of countries. So China, by GDP, was ranked number 2, ranked number 85 in terms of GDP per head. But look also at these other so-called rising powers or emerging powers. India ranked number 10 and 145 in terms of average GDP. Brazil ranked number 7 and number 58 in terms of average GDP, and Russia also 52. The point is, this is historically completely unprecedented. In the past, when the G7 were running the world, there was a high correlation between the G7 countries' rank in terms of GDP and their rank in terms of average GDP, GDP per person. Those two things were highly correlated. Whereas now, when we have the G20 and we have these countries sitting at the G20, we have some countries with very big and high-ranking GDPs that are very, very poor. And of course, this means that there are much greater divergences of interests at the top table of global governance in the G20 than there were in the G7. So this makes the whole global governance problem a whole lot more difficult, even though it's obviously right, you would say, that these countries are participating more in global governance. They bring a very different set of preferences to bear. So I want to just illustrate this idea of the middle income trap, because as I said, this really gives Chinese leaders a nightmare that China will be caught. The general argument of the middle income trap is that many countries growing through the middle income range, however you define that range, experience more volatile growth and slower long-run growth than countries that are low income or countries that are high income. There's something about this middle income range which makes it difficult for countries in that range to keep rising fast. And in fact, if you look historically, very few countries that were low or middle income countries have graduated, so to speak, to the high income range, and most of those that have are based either on natural resources, think of Kuwait, or they are on the periphery of Europe, think of Portugal, think of Cyprus, think of Malta, think of the Balkan countries. They benefited from spillovers from Western European growth. And so if you take out these two cases, countries with natural resources like oil and diamonds and countries on the periphery of Europe, the only exceptions to the countries that escape the middle income trap are countries in Eastern in East Asia, that is Japan, Korea, Taiwan, Hong Kong, if you call Hong Kong a country, and Singapore, if you call Singapore a country. Very few countries other than those ones have made it. So this is one representation. This is 19 countries arranged by income relative to the United States in 1960, and countries arranged relative to the US in 2008. And the basic point is that countries that were in the middle income range in 1960 continue to be in the middle, most of them continue to be in the middle income range in 2008. This is one way to represent the middle income trap. This is another representation which shows again, this is GDP per capita relative to the US in 1970 this time. This is the low income, the middle income, the high income in 1970, and this is the same for 2010. And you can see that there's this great cluster of countries right down at the bottom, which were low income in 1970, and it still remain low income in 2010, 40 years later. China is here right on the cusp. These are the middle income countries, and these are countries that you might say are stuck in the middle income trap. Few countries that were in the middle income in 1970 have made it into the high income countries by 2010, and many of these are, most of these are rather anomalous kind of countries in one way or another. So this is another representation. This is countries tracked over time. This is 1950 to 2005. This is relative to the US. This is Japan's trajectory. This is Taiwan and Korea's trajectory. And this is Malaysia, Thailand's trajectory. And this is Philippines, Vietnam, Indonesia down here. Well, it makes sense to talk of these countries, at least, and probably these countries, as stuck in a middle income trap. And that's what China wants to avoid. But look at this chart. This chart, again, is what causes the Chinese leaders to wake up in the middle of the night with nightmares. So this shows, this is not relative to income relative to the US. This is absolute income, per capita income here. This is 1963 through to more or less today. And these countries here, Japan and Hong Kong, this is the cluster number one. This is cluster number two. This is Taiwan, New Zealand, and Korea in this cluster here. And down here, far below, are Mexico, Peru, Thailand down here, and right down here at the bottom is China. So for all the talk about China as the emerging superpower, I mean, there's something unreal about that kind of talk. China is a very, very poor country. It has a long way to go. It could quite possibly be stuck in the middle income trap. And that, I think, helps to understand this drive to centralize in power in China that we're seeing since especially 2013, due to worries about the middle income trap, about the US pivot to contain China, leading the leaders to centralize power so as to be able to impart a directional thrust through the use of resources in a way which will get them fast through the middle income trap. So China will not become old before it's rich. And therefore you can understand the constraints on social media, the anti-corruption drive, the retention of great power in the hands of the state-owned enterprises, and so on. A whole lot of things fall into place if you understand that China is really worried about being stuck in the middle income trap. And this is the last point. So it's a point really that I've made already, just to remind you that when we talk of something like a tripolar world, defined only in terms of things like quantities, like China becoming the major trading partner of so many other countries, that is misleading to just leave it at that, because it leaves open the question of what do the leaders of the new pole, in this case China, or you can add in Brazil, India, and Russia, what do they want? with this new kind of geoeconomic capacity. The question is, and I'd leave it as an open question, to what extent are they going to use this geoeconomic capacity to challenge the existing world order, or will they simply use it in order to get more participation in that existing world order? That's a question we could discuss. But I will leave you with this remarkable quote from Obama. It relates to the point I made earlier, that what happens by way of conflict and disorder coming as these countries rise depends on the incumbents' response. And here's Obama in the State of the Union address saying, China wants to write the rules for the world's fastest growing region. Why should we let that happen? We should write those rules. Now, this is a recipe for conflict. Thank you.
Okay, thank you very much. I'm going to keep my comments relatively short and relatively focused on two major areas, but before I go any further, I just want to say these were excellent presentations. I know we're anxious to open the floor to questions as quickly as possible. So I want to thank our presenters. I want to thank Jan Harald. I want to thank Ren Jenny Lindgren for helping to put all this together, and looking forward to continuing the dialogue. The 2 points I want to make, one primarily has to do with the role of China, which we've heard quite a bit about this afternoon. And the second has to do with kind of the larger question of the role of the rest, which was one of the main themes for this seminar today. We talk about China, we talk about some of the institutions, the financial institutions that China has developed just over the past 2 years. You look at the Belt and Road, the AIIB, the New Development Bank, and you do see a refrain from Chinese policymakers that these organizations are supposed to be what they are. They are financial institutions, they are primarily economic, designed for development, but it is very difficult to get away from the political overtones of them. The fact that there are some very significant political effects to these organizations, which we're going to see in the very near future. There was note of a comparison with the Marshall Plan. Well, Chinese policymakers have been very reluctant to draw that line. The argument being that it was a much different era, it was a much different foreign policy when we talk about the US. But there are some comparisons to be made. Already we have seen a lot of changes in Chinese foreign policy towards some of the major nodes or pivot points where the Belt and Road might go. You look at Pakistan, you look at other parts of South Asia. You look at Central and Eastern Europe, and we are starting to see some very interesting political shifts. The AIIB is an example unto itself. Like, it's easy to remember that when the bank was first announced, most of the countries that were involved were non-Western. You had the United States that was at least tacitly encouraging its friends and allies not to join right away, to wait, to get more information and so forth. And then within the space of a very short time, you had the United Kingdom crossing the floor. And it was almost like a floodgate. It was almost like a brand new nightclub opens up in Gurnu-Loka and everyone wants to get in. All of a sudden you see a huge number of Western economies get in. And I think this surprised even Beijing, just the sheer number of members of the AIIB. So how is Beijing going to deal with this? And I guess the last point about China is, are we going to be seeing these arrangements be set up in the format of partnership? Like, will we see a lot more spreading of decision-making power, economic power with these new institutions? Or is there the possibility that these will be more hub-and-spoke organizations, with China kind of acting as the central nexus? So these are very important points. And when we talk about the larger issue, we talk about the rise of the rest, and we talk about the role of the rest. Well, I'm reminded of the idea of norm-making versus norm-taking. And as we've heard, for a very long time, it was the West, it was the United States, it was Europe that were primarily responsible for making the norms in the financial system. But we are now starting to see a shift. We are now starting to see many countries, including the BRICS, start to assume that role. And how are they going to do that? How are they going to adjust to that new role, especially when you look at the sheer number of political challenges many emerging markets, many large developing states are having to deal with? A lot were already mentioned. China is now having to grapple with a new normal in its economic system. The Brazilian government is having a few technical difficulties this week. The relationship between Russia and the United States, I couldn't even begin to predict how that is going to wind up. That would be the subject of another seminar. I would also add to the mix Iran. Just this week, we saw a slew of new economic deals just between Iran and Italy. Very likely this is not the end of the story, that Iran probably will be playing a much more pivotal role when we talk about all of these new institutions, new norms, and so forth. So this has to be kept in mind. And I guess the last point I want to make is another major story this week has been about transparency in the financial system. The Panama Papers, again, we're just seeing the front end of this story. I imagine that it is going to, at the very least, engender quite a bit of debate on how transparency fits into the role of the international financial system. So one of the many reasons why I really enjoyed the presentations this afternoon is that they provide excellent platforms for a lot of debate about these issues and about issues yet to come. So thank you very much, and I guess we can open the floor to questions.
Yeah, thank you, Mark. So if the presenters can take their seat at up here, and we will open the floor for questions and comments. Okay, so we have one over here. Yeah. You get a microphone from Liv there. It's there, Liv.
Hi, my name is Sigrid Nilsson. Thank you very much for very interesting presentations. I'm very interested in hearing more about how you assess the connection between China and, say, the other BRICS countries, in particular Brazil and South Africa, considering the problems they're facing in terms of corruption and the economy spiraling downwards in several of the BRICS countries. Will China continue to be as closely associated with those countries, or will they be looking for new partners? Thank you.
We can take a few more questions. So here first. You get a microphone there.
Thank you. Yeah, my name is Comfort, and I work with the diaspora organization in here in Norway, and in my home of origin, Uganda, Tanzania, and Kenya. When Madam China spoke, and the last speaker there, I saw that I have a stake in this debate. He talked about the rest, and Madam China came with a point where she pointed to the MDG and the SDG. I will add 4, and then we shall base it SDG 4. No, it starts mother language, UNESCO SDG 4, target quality education by 2030. That's where Africa comes in. Africa, your place of pillow talk. When you want to build muscles to be as strong as you are, Africa is your place, is where you go for pillow talk. So my question is, given the opportunity that we are going to focus on mother language, UNESCO, quality education by 2030, how are you going to teach Africa languages? Or how are you going to ask or to conduct projects in Africa for African studies when you know you've locked African history in the pyramids? Because the pyramids in Giza and the African people, we cannot be on the same continent and we don't share a history. Or, as the Western researchers are already claiming that the pyramids were built by aliens, but at least so far, we have found mummies of Africans in the tombs. So whether the aliens built them, or whoever built it, or Western philosophy or whoever, at least the Africans are part of that history, because we have found mummies of Africans in those, in the tombs in the Giza. So are we going again to trick Africans like you tricked us on the programs of MDG, and brought an issue of FGM to demoralize Africans so that they were just scrimping, begging, accounting for the money instead of doing projects for development? So are we going to let the SDG, quality education by 2030, to be a reviving program for Africans to learn their history, to open up the pyramids for Africans to know their history? Thank you.
Thank you. Shall we take one more behind here?
Thank you very much. My name is Katarina. I work for Save the Children Norway. Thank you for some excellent presentations. Since we are here in Oslo, I would be interested to hear how you see the Nordic countries in this new multipolar world. And some people have talked about an end to Nordic exceptionalism. And you also talked about how the Scandinavian countries quickly became part of the new Asian Investment Bank. So yeah, how do you see, especially on development policy and foreign policy?
Okay, thank you. So we have 3 questions, and none of them were addressed to any panelist in particular, so I think you should feel free to comment and answer the one you feel most relevant. Okay?
Maybe I take the first question on China relations with BRICS. I haven't studied specifically, but in China's diplomatic strategy, it has circles. The closest neighbors are the most important, like Pakistan, Southeast Asia, and then it has greater neighborhood area that even goes to Middle East, and important big country relations that probably includes BRICS. And China is fully aware that there is competition of leadership in the BRICS mechanism. It seems that Brazil is more collaborating with China by setting up, for instance, currency swap before the multilateral swap was set up, and not to mention the relations between China and India. That's more competition. But I don't think China will give up, because often these countries act as a group in IMF and World Bank reform debates. In G20, for instance, it's also very important, and China would like to picture itself as one of the leaders, if not the leader of the developing world. And it is the new development bank. It is one instrument for China's these big projects overseas, if not for Asia, Eurasia region, but for Latin America and some other parts of the world.
I have the microphone. Maybe comment on the Nordic countries' role in this context. I think that's a good question, because the Nordics have, on the one hand, played a quite constructive role when it comes to setting the agenda in the MDBs, when it comes to gender questions, when it comes to equal right questions, when it comes to environment, etc. So I think they have, when we wrote this book, I went around to all the banks, and it was often said that the Nordic countries, they punch about their weight. So they have an influence larger than their shareholding. On the other hand, there is a tendency to follow the lead from the US. And to be a bit reactive when it comes to taking actions in this new context. And I think that's the question the Nordics need to face in the future. Is there a possibility to continue to play a constructive role when it comes to setting the agenda? I mean, one One element with the MDBs is that the middle-income countries play a much stronger role than they used to. It's not any longer a transfer of funds from rich countries to poor countries. It's more to satisfy the needs of different, or all the different members of these countries. So, and the Nordics represent something middle-income countries really ask for when it comes to building institutions, when it comes to, for instance, on taxation issues, transparency issues. There is a demand for the expertise and the knowledge from the Nordic countries. So there is a potential for the Nordics to play a role there. And not only to focus on the poorest of the poor countries. So I think that's going to be the debate moving forward.
Okay, thank you. Robert?
Just on that last point about the Nordics, UNCTAD, the United Nations Conference on Trade and Development, is a kind of a think tank, and it is the only place in the UN system where the views of developing countries rather than Western countries, prevail about development strategy. And every 4 years, UNCTAD's mandate for the next 4 years work program has to be negotiated. And in the recent negotiations, Western countries, very much including the Nordics, have been very, very aggressive in trying to rein in UNCTAD and get it to adopt a basically OECD / World Bank type agenda to think in terms of, to embrace neoliberal economics, and therefore to reorient UNCTAD away from a role of kind of challenging the prevailing consensus about neoliberal economics. And I was struck at the 2013 negotiations when I happened to talk to the senior Norwegian representative in these negotiations going on in Doha. And he said to me that he thought it was really important that UNCTAD stop talking about the global economic crisis, about the causes of the crisis, about solutions. And I said, why? He wanted, like all the Western countries, wanted UNCTAD to just talk about youth problems out in developing countries, the further away the better, or gender problems, or unimportant issues like that, and leave the important issues like the whole functioning of the global system for the IMF. And he said, because the IMF has the competence, UNCTAD does not have the competence to deal with these issues. And so I asked him, have you read any of the trade and development reports where UNCTAD has been presenting its analyses, its heterodox analyses? And he confessed that he had not read any of them, neither had other members of his group. But he said the consensus among our countries, the Group B countries, that's the Europeans and the North Americans, the consensus in our group is that UNCTAD does not have the competence to deal with these, whereas the IMF does. And I thought that was such a disappointment that even the top Norwegian in these negotiations was just following the lead of the West, the United States, the Brits, and so on. That's the first point. Just quickly on the second point about China and the BRICS. The BRICS, as an organization, the BRICS summits, they have been really, really careful to focus on a very narrow set of issues, much narrower than, for example, the G20. The G20 is more or less paralyzed because everything but the kitchen sink has been put onto the agenda of the G20. The BRICS have been quite effective in advancing a quite narrow agenda. And the reason they've kept it very narrow is because there are all kinds of disputes, especially between China and India. There are territorial disputes such that China claims parts of India. So some Indians have been very surprised living in that part which China claims. Indians who want to visit China have been very surprised when the Chinese government said, you don't need a visa because you're a Chinese citizen. So we will just give you a special piece of paper which allows you to go. And of course, this makes the Indian government absolutely apoplectic with anger that some of its citizens, China says, are Chinese citizens. But so there are the territorial disputes. Russia feels very threatened by this whole range of projects extending into Central Asia, because Central Asia is Russia's area of influence. And here is China coming in with lots and lots of resources. Russia doesn't have the resources to counter it. So, and also in the case of Brazil, Brazil's industry has been knocked out by Chinese imports to the point where the costumes worn in the carnivals, festivals in Brazil, are now all made in China. They used to be made in Brazil. They're now made in China and imported. So Brazil's industry has been knocked out by Chinese imports. So there are lots of tensions between these BRICS, and they managed to cooperate by taking a very narrow range of issues to talk about and leaving all the other things to the side.
Just a small point on the role of Nordic countries. I think it's great that an important point is to help set up standards and institutions. But another thing is for the companies in Nordic countries. Probably Norway doesn't worry about its economy so much as in Denmark. There lacks a general engine of growth, and with Danish companies' competence in green technology innovation, that would help some of the projects to at least brand themselves to have some of the standards. And it is an opportunity that these countries should not lose. So maybe Nordic countries leave all the work to its companies to do that, whereas many other countries would promote and try to participate heavily by economic diplomacy.
Okay, we open up for some few more questions. So this behind here first.
Yeah, my name is Stein Hansen. I'm co-author of Per Øyvind in the book he presented. First of all, thank you to all the speakers for excellent, interesting, up-to-date presentations, and very complimentary, the three of them. I had one comment on a small item about infrastructure in China. You talked about the high-speed trains being so expensive that it creates problems in other parts of the transport system. You have a parallel and very similar problem with the Chinese toll roads. Chinese toll roads are about the most expensive toll roads in the world. That results in below capacity levels of traffic on all these toll roads that have been built. It already far exceeds the US interstate highway system. But you have congestion, traffic accidents, a lot of problems on all the old provincial and local highways and roads, because the truck drivers who really have fierce competition between them cannot afford to use the toll roads and therefore drive their overloaded trucks on the small roads. And this really is a big cost to the Chinese economy as a result of how these toll roads are being managed. I found Professor Wade's comment on China Indians or Indian Chinese. I don't know how many times I've been into Myanmar from Yunnan province of China, working there. I don't have any stamp in my passport from crossing from China into Myanmar and out again. That border between China and Myanmar along the Yunnan part is similar to the border between Oslo and Bærum communities. Most people are not aware of that. Finally, I would like to hear a little bit from you, Professor Wade, your World Bank experience. How do you think, what sort of improvements and reforms with regard to the multilateral development banks can come about and how quickly as a result of what China threatens to do in terms of quick processing of loan applications to the AIIB. A typical saying is that during the time it takes to process a loan in the World Bank, the Chinese can build 500 kilometers of double-track railway. Thank you.
Okay, thank you. And we have a question here for the...
Hello, my name is Johan Osbach. I'm a student at LSE. My question is about the triangular relationship at LSE. Yeah. So my question is about the triangular strategic relationship, primarily focusing on the role of Europe. As you were saying, there is a tendency for conflict in the relationship between China and the US. But what do you think really is going to happen, or what path will Europe take in this triangular strategic relationship? I visited the European Investment Bank last year, and I was struck by the similarity of the language that they use, talking about European connectivity, Eurasian connectivity, and they told me actually that they had a working group set up together with the Asian AIIB. So I'm wondering, I can see that the US and China are kind of going on this track of competition at least, but how will Europe respond? And then particularly, I'm wondering, so in July this year, there's going to be a meeting for the Asia-Europe meeting in Mongolia. And I'm wondering, what do you guys think is going to come from that meeting? And is there room for greater cooperation between Asia and Europe forward?
Okay, thank you. I think you can just hand the microphone to your right. So I have 2 more questions here, and then we go for an answer.
Thanks a lot. My name is Sedmund Haukland. I work for NORAD here in Oslo. Thank you very much for your very interesting presentations to all 4 of you. We talked about the owner of the banks, China and you, and the main owners, main partners, and how they now develop. What I would like to, what we know is that banks compete. So my question is very similar to the one that was presented by Mr. Stein Hansen. How do the policies of the World Bank, of the African Development Bank, and of the Asian Development Bank change based on the competition from AIIB and the role of China in these regions? So I would like to also to hear how do these banks adapt and compete with the new initiatives? Thank you.
Okay, so just hand the mic over since it's nearby there.
Thank you. My name is Paul Wade, also from NORAD. It was very interesting to hear about Professor Wade's and Dr. Young's and Per Bastos' presentations. It opened up some questions. It seems to me that from Dr. Wade's presentation that China has, by having an extremely impressive economic record, has also been a kind of high-stakes strategy with enormously high investment rates, probably by repressed savings, forced savings, probably. Right.
Just like Korea and Taiwan did.
Okay.
Also Japan.
Right. But also very risky in the sense that it seems like all these construction companies, which have been one of the enormous construction effort, has been one of the drivers of growth. And it's kind of like a flagship thing where China has shown the world that it has a kind of economic development model which differs from what the West has been advocating. And with you said it was a 40%, what do you call it, non-performing loan. I don't know how these loan portfolios are, but I can imagine if they've been one of the drivers of economic growth in China, we're talking about probably some $100 billion. And then 40% risk. Here we're talking about a huge political damage to China if those companies should go bankrupt. So that explains why they are desperate to go out and get contracts outside. But I think that aspect one can add to the story, that it's also to avoid the collapse of those construction firms. What I'm driving at is that it seems like China, because it also wants to have this prestige as a kind of alternative economic model, more state-directed capitalism, where the state kind of sets the stage for major investments, and then the private sector follows suit, that it cannot afford to kind of lose the image. And one way it will lose the image is if those non-performing loans actually materialized. So it will probably do whatever it takes to get construction contracts and kind of sanitize the finances of those companies. We're talking about hundreds of billions of dollars, right? I would guess that in addition to using the new multilateral instruments like the AIIB and the NDB, we haven't really talked about China and Africa. But China the other year, I think it was 2 years ago, was actually lending more to African countries for infrastructure than the World Bank was. So that's an additional element here. So it seems to me that the challenge for multilateral development banks like the World Bank in Africa, like the AIIB in Latin America, and also the World Bank in Latin America, is very tough. And we know that many African leaders would rather go for the quick loan decision for an infrastructure project done by the Chinese than cater to all the demands of Western either nations or multilaterals dominated by the West on all kinds of demands, safeguards, etc., environmental, social, and so on. This is just well known. So then my question is, will there be a race to the bottom? Will the Western-led MDBs have to relax on those constraints? Those constraints have been, in a sense, driven by the political dynamics in the West. So does one have to give up that? Or is there some other way that Western-led development banks can be more kind of proactive? One idea, for instance, is if you look at international capital flows these days, compared to 15 years ago, to poor countries, let's say in Africa, it was overwhelmingly official development assistance, ODA, very little private capital flows. In those 15 years, the picture's changed totally. So there's actually a lot of private capital flows available if you have bankable projects. For instance, I was recently in Dar es Salaam, and I heard that there are 30 competitors of the same type as Norfund, so these development finance institutions, all chasing around in Tanzania trying to look for good projects. My point is that there seems to be a lot of private capital. If we can find mechanisms to catalyze the private capital investments, for instance, public-private partnerships in infrastructure investments, let's say in African countries, where the capital portion is really provided by the capital markets, the private capital markets, but there is some kind of interest rate subsidy or some kind of guarantee, which typically will only be a few % of the cost. Let's say if you have a 5% interest rate subsidy or a guarantee, like the Swedish SIDA, they give a guarantee. They offset 8% of a private investment as a loan, so as a guaranteed loss provision. That means that you can basically go from 8 to 100. That's 12.5 times you can leverage. So you can bring in 12.5 times more capital by drawing on the private sector and giving the right incentives to catalyze it, as opposed to the old traditional way of development financing, where the development finance institution puts in the full capital. So it's just an idea. I'm just wondering about your reaction to this, because either it seems like in this kind of competition, either it's a race to the bottom with regard to safeguards, or the Western-led institutions come with something new, something better. Thanks.
Okay, thank you. Would you like to comment on well, it was the Yang and Wade and some really big issues being raised here? We're supposed to be finished at 3 o'clock, so I don't know if there are more questions, any hands I have overlooked. Is there? So there's the one there. Shall we take that immediately and then, okay, please.
My name is Barbara Hamot. I come from Poland. Thank you very much for these very interesting presentations. And I would like to add one comment to this question about are we able to attract the private capital to cover the financing gap to pay for very important development issues. So my experience with the World Bank as the private sector liaison officer is that we can just solve this problem and we can attract also private capital, but then we should be much more focused on private sector. So it means that, for example, my feeling was that Multilateral Investment Guarantee Agency that is operating within the World Bank was quite inefficient in last years. What was the reason? It is MIGA, Multilateral Investment Guarantee Agency. It is the mechanism that gives the guarantee for each project, and this project is becoming to be bankable in the sense that it gets AAA. So it is without any risk, because MIGA covers all of the risks. Political risk of losing property, of changing the government and other things. And I was deeply interested in it. But I feel that the space for competition between the World Bank and between also the Chinese institutions is that Chinese investors are doing this without warranty, without MIGA. They don't need it within their system because they are covering the risk, and the attitude of the Chinese people to the risk is a little different. It is based on the relation. Chinese investors are not going into the project without the very stable, long-lasting relation. Western philosophy and Western culture is different. We calculate the risk. They don't calculate this. So they are more open. And also the comment to this African story is that without the participation of the private sector, without the participation of the local societies, we will always have very high risk. So my feeling is that there is the space for the activity of the World Bank, because I'm respecting very much Asian institutions, but I don't expect from them that they will be interested in attracting local people and local societies, local small and medium entrepreneurs, in a sense that they could create for them the space to make the profit, to earn money, to have longer lasting development, including also the cultural aspects and other things. So I think that there is something like the competition between Asian institutions and the World Development Bank and other agencies within the Multilateral Development Bank. But our Western philosophy and our attitude to the business is that we should be more ethical, more focused on local problems. And also, I'm a little disappointed with this conclusion on the Nordic attitudes to the international community, because I expected that the best very simple model that is operating is in the Nordic countries, because Nordic investors are very ethical. They take care of this. If it is coal or it is not coal, for Chinese people, it doesn't matter, right? So, excuse me, thank you very much for this very interesting seminar.
Okay, thank you. So I suggest we start on the left side here. So if you could start, Mark, if you have some comments to the general comments made, or if not, I think you just, and when you're done, pass the microphone.
Okay, I'll just give one comment to Johan's question about the trilateral relationship and the role of Europe. I guess I hate to answer a question with a question, but what do you mean by Europe? And I say that because we've seen a lot of examples, first of all, of the overall question of what is European foreign policy, not only towards China or Asia or the BRICS or what have you, but also the fact that if you look at Chinese diplomacy in Europe right now, we're seeing many layers start to appear. We've seen some very high-level summitry, for example, in the case of the United Kingdom, more recently in Prague. We're starting to see, as was mentioned, kind of sub-regional approaches, such as the 16.1. Going back to the point about the Nordics, well, one question which is starting to be bandied around is, should there be a 5+1, a Nordics plus China dialogue start to appear? And if something like that were to take place, I imagine that quite a few of the issues brought up today would probably be, right at the beginning of it. And then finally, you get to the point where, how do you discuss China and the European Union, not only in the question of how to deal with the AIIB, how to deal with the Belt and Road, but also some of the more specific issues related to global development. So I just wanted to put that out. Thanks.
Just a few points about the changing policies of the existing MDBs. It's definitely a big change going on at the moment. We see a focus on reducing costs, especially when it comes to administrative costs, benefits, pensions, etc. We see a change when it comes to credit policies to be able to expand lending. We see a focus on safeguard policies being, I mean, IFC has led the way in their performance standards, where they put more emphasis on the implementation phase and less on the assessment prior to loan approval. Private sector lending is definitely increasing in all the banks. An interesting case to follow is the Asian Development Bank, because they're in direct competition with the AIIB. And to see they have changed their capital base, merging OCR and ADF, which gives them a lot more possibilities to do lending, but also to see how they're going to act when it comes to processing time. I'm quite sure this is going to be a proof, or the focus on how the Western owners are able to change the policies of an institution. The starting point is, of course, there's a lot of co-financing between ADB and AIIB, so they might learn something from each other in the starting period.
I guess I have 2 points. One is the competitiveness of China, of China's packages. One example was the high-speed rail in Indonesia. China won over Japan, even though Japan started many years earlier than China. It was originally Japan's initiative, and China's package was more expensive and interest rate was higher. And the Indonesian government said the reason we gave to China instead of Japan is because China adapts a business approach. We don't like government approach. And this is surprising because we always thought that China is government-led. And this is just because China doesn't need government guarantee of this project from Indonesia. So the government of Indonesia is not in some kind of financial risk. And this shows that China can sort of coordinate its banks and industrial companies to offer such packages. And therefore, for instance, the Addis Ababa meeting has a lot of emphasis on the role of private actors for financing for development. And I'm sure this is a welcome message for China too, because these state-owned enterprises, they're regarded as private actors too. Another point is that, thanks for the comment on the toll roads, it shows that actually, we talk about China, but China is not one. There are so many actors. Many of these projects are led by local governments, local level state-owned enterprises. And these are happening the same even with cross-border projects. And I just feel that there needs to be more systematic and in-depth study on the roles of different Chinese actors in these initiatives, both within and outside China.
On the point about the World Bank and infrastructure, one question is why the bank and the other multilateral development banks moved so far out of infrastructure, especially in the 1990s and 2000s, and placed so much emphasis on poverty reduction, reduction of extreme poverty. These two things went together. As they moved out of infrastructure, they built up the social agenda, which I think was a great mistake. In fact, I think it was a scandal that the bank moved so far out of infrastructure. It should have been lending 10 times the amount that it was actually lending for infrastructure, given our knowledge of economic development. And so the question is why? And a large part of the answer, I think, is to do with US politics. The relationship between US and certain US NGOs like the Environment Defense Fund and the US Congress. The US Congress being very opposed on the whole to the World Bank, thinking of it the Republicans thinking of it as a socialist institution that should really be closed down to allow the private sector to do these things, and then NGOs finding a role for themselves in leading international campaigns against the bank on the grounds that the bank was destroying the environment and indigenous peoples and so on. So as a result of this, the bank put in place very stringent safeguards, as they were called, for social and environmental protection. And you can argue that these safeguards went way beyond what met any plausible development sense because of the political agendas that were driving them. And therefore, I think that the terminology that you used, race, as though either the bank, if the bank continued in infrastructure, it could only be part of a race to the bottom. That was the phrase, race to the bottom, means the removal of all safeguards. I do think that that's misleading, in particular because you can argue that the safeguards were too stringent. Just as an example, environmental assessment procedures required for many projects with any sort of impact on the environment, a full-plated, large-scale, long-term environmental assessment before the project could start, rather than saying, for example, you have to establish an environmental effects monitoring agency at the beginning, but you don't have to delay the project starting for 18 months or 24 months before you can even think of beginning the project. But the safeguards required the first, and they didn't allow the second. That's just an example. That's why I think the terminology of race to the bottom is misleading. In terms of how to accelerate, yes, no doubt that there's a big scope for more private-public partnerships, though the governance of these things in the bank is actually very difficult. But remember that just in the past few days, 7,000 school children in Edinburgh have not been able to go to school. Why? Because it's turned out that the school buildings built with public-private partnerships under the Gordon Brown government to allow the schools to be built without coming onto the budget, the British government's budget. These schools were crap. They were terribly built. They weren't properly monitored. So the question of public-private partnerships, and there are so many other examples, is how you get an incentive structure in place which will ensure that the private party does not simply use it as a rip-off. And that is really difficult. In the case of the AIIB, I think a little piece of good news is that the AIIB has hired Stephen Lintner, otherwise known as God, because Stephen looks like God. He's got a great mass of white hair and a huge white beard, and he's been the czar for safeguards in the World Bank. And I know him, and he is sensible, let us say. He does not simply buy whatever the environmental NGOs and Bruce Rich and such people say the bank should be doing. He knows how the world works. So I think it's a good piece of news that he has been hired by the AIIB to take charge of their safeguards. It does mean that the AIIB will not simply eliminate social and environmental safeguards, but it also means that they won't be as silly as many of the ones that the World Bank has had to at least pretend to comply with in the past 2 decades. And just one final point about the World Bank. The World Bank is in a terrible mess. It's in a terrible mess because it's got an absolutely dreadful president. And I know the story of how it is that this particularly dreadful president was appointed without doing any due diligence on his previous record as president of Dartmouth College. And it is an absolute scandal, but it reveals how casually the US has treated its monopoly position in the World Bank and generally treated many other parts of its preeminent power position in this very casual way. It wasn't until the Wednesday before the Friday when the US had to have the nomination in. Right up until the Wednesday, Timothy Geithner was insisting that Larry Summers was going to be the US nominee, therefore the next president. And finally, on the Wednesday, the White House vetoed Larry Summers. and that left them only 2 days to find somebody else because they hadn't been thinking of finding anybody else. And when Obama rang Kim to invite him to allow his name to go forward, Kim didn't believe that it was Obama, and had to be mechanisms had to be put in place to assure Kim that this was indeed Obama, and that he was being offered the presidency of the World Bank that he'd never really even considered. And his record at the World Bank has just replicated his record at Dartmouth, which was so bad that when his leaving Dartmouth to go to the World Bank when the ceremony was held for his leaving, most of the faculty of Dartmouth mounted a boycott. They've refused to come, and those who came kept their hands together at the end rather than clapping, because he was so unpopular at Dartmouth. But the Dartmouth faculty could not believe their luck that the World Bank was taking on this disastrous president. So it makes you wonder. I mean, it's a very good, all this underlines the point that these developments that we've been talking about, the emergence of these new financing channels for development, is a very good piece of news. We should all be very glad that it's happening, and that the World Bank will be bypassed, or it will seriously reform itself.
Okay, so yeah, on that last positive note that it will be reform. Let me just I would like just to thank the panelists for coming, for great presentations, to the audience for showing up and engaging in such a stimulating debate and discussion. So thank you very much.